What we have, honorable colleagues here, for those who are not members of this particular ad hoc committee, is the handwork of not a few, but of all. 36 members plus the regional and zonal caucus leaders. 100% consent and assent of all of them. I've never seen in my history here in the National Assembly where a report is endorsed 100% unanimously by all members except this particular assignment. So I just want to assure you that what you have before us is a reflection of Nigeria's interest, Nigeria's agitations, and Nigeria's inputs into what they feel should be the revised tax bills for Nigeria.
Last episode, we shared with you excerpts from day one of the two-day public hearing session held at the Senate of the Nigerian National Assembly to discuss the 4 tax reform bills forwarded by the executive to the legislature. As is very well known, public hearings are avenues for the general public to make input into legislations. The Senate held its public hearing for 2 days, from Monday the 24th to Tuesday the 25th of February 2025, while the House of Representatives held its own from Wednesday the 26th to Friday the 28th of February 2025. The House of Representatives Committee on Finance has since followed up with its internal retreat, which involved consultation with stakeholders and experts. The committee's report was presented to the leadership of the House on Tuesday, the 11th of March, and on Thursday, the 13th of March, the House was dissolved into the Committee of the Whole House to consider the report. In keeping with convention, the report of the Committee of the Whole House was immediately presented to the plenary.
The first report to be considered is that of the Committee of Finance on a bill for an act to provide for the assessment, collection of and accounting for revenue accruing to the Federation, federal, states, and local governments, prescribe the powers and functions of tax authorities and for related matters. It's my pleasure to invite the Chairman, Committee on Finance, to give us synopsis of this particular bill.
This report is a summary of the extensive review of the bills carried out by members of the House Committee, the Special House Committee of Finance, following the public hearing. The first bill, Mr. Chairman, the Nigerian tax bill. This bill is purposed to be the core legislation detailing the tax obligations of every taxpayer in respect of his income, profits, instruments, or gains. To achieve this purpose, the bill seeks to repeal and amend the current tax laws and consolidate all existing tax laws into a single, comprehensive, and simplified piece of legislation. This approach is expected to eliminate ambiguities, ensure consistency, and provide clarity for taxpayers and tax administration alike. 2. The Nigerian Tax Administration Bill. The Tax Administration Bill focuses on the processes for assessment, collection of, and accounting for revenue accruing to all tiers of government. The bill prescribes the powers and functions of the tax authorities, as well as introduces new provisions aimed at ensuring hitch-free tax administration processes. The Nigerian Revenue Service Establishment Bill. The bill repeals the Federal Inland Revenue Service Establishment Act and establishes the Nigerian Revenue Service, an agency saddled with the responsibility of collecting all federal taxes, whilst collaborating with other revenue agencies across the three tiers of government. The functions, powers, funding, etc. of the Nigerian Revenue Service are elucidated in the Nigerian Revenue Establishment Bill. And finally, Mr. Chairman, the Joint Revenue Board Bill. The Joint Revenue Tax Board is rebranded as the Joint Revenue Board pursuant to the provisions of this bill, while retaining its functions and powers as is. The bill establishes the Office of the Tax ombudsman to allow for alternative dispute resolution mechanisms, thus making the tax appeal tribunal and the subsequent appellate court a final dispute resolution.
Earlier at the public hearing, it was canvassed that the word ecclesiastical be replaced with the word religious.
So the Nigerian tax bill, these are amendments which we worked on and adopted at the committee level. So on page 3. Proposal to replace the word ecclesiastical with religious, which was what our stakeholders preferred. The word religious is used instead of ecclesiastical, which is seen as if it is purely one religion. There was a call for deletion of the proposed reintroduction of inheritance tax under the guise of taxation of family income, as this oversteps divine jurisdiction, which places inheritance matters within the scope of Sharia and customary laws of the North and South, respectively. So in the amendment, the inheritance tax is defined as inheritance before distribution, cannot be taxed before distribution.
On value-added tax,
the committee adopted the 7.5%.
With regard to the distribution formula, the committee recommended 50% for equality of states, 20% to be shared on the basis of population, and 30% based on consumption.
Recommendations for the reinstatement of contributions towards NASENI, NIDA, and a call to ensure continuous funding from the development levy. This, of course, was retained without sunset clauses. Suggestions to name NIPC as the relevant authority in respect of priority sectors and company operating therein. This, of course, was amended and adopted. Appeal to reinstate the need for a certificate of acceptance of fixed assets, CAFA, to claim capital allowance as historically issued by the Industrial Inspectorate Department of the Federal Ministry of Industry, Trade and Investment. This is important as the bill eliminated these particular provisions, which what it means is that if you are a businessman and you procure equipment which you want to use for capital allowance, the Federal Ministry of Trade will go to your factory or offices and inspect and ensure that you have put that in use, and then issue you a certificate of capital allowance. And this is retained. This is brought into the bill before you. Proposal for an introduction of a 1.5% service charge based on the economic development tax credit for companies operating in the priority sector. Proposal to resolve the conflict between the proposed NRS, Nigerian Revenue Service, and NUPRC in respect of collection of royalty for oil and gas companies in favor of the service. The royalty is seen as tax, and so the Nigerian Revenue Service is given the responsibility to collect all taxes in the law. The bill itself, if passed, of course, has repealed all these companies' income tax, which was enacted in 1979, the value-added tax in 1993, personal income tax 1993, federal inland revenue, if we pass that bill, 2007, capital gains tax 1967, Stamp Duties Act 1939, Casino Act in 1965, Deep Offshore and Inland Basin Act, and then, of course, Industrial Development Income Tax Relief 1971, Petroleum Profit Tax Act 1959, and, of course, Venture Capital Incentives of 1993. Mr. Chairman, let me start for the consideration of this first bill. Thank you, sir.
Honorable colleagues, it will interest you to know that we have clauses 1 to 203 under this particular bill. And I'm sure since this document has been circulated since yesterday or day before yesterday, at least electronically, we have taken time to go through all the clauses, one after the other. So with your kind permission, if there is no any issue with the brief given by the chairman for us to proceed from clause 1, and see how far we can go on this particular bill.
The Committee of the Whole House passed all the clauses.
Honorable colleagues, the second report to be considered is that of the Committee of Finance on a bill for an act to repeal the Federal Inland Revenue Service Establishment Act number 13/2007 and to enact the Nigeria Revenue Service Establishment Bill to establish Nigeria Revenue Service charged with powers of assessment, collection of and accounting for revenue accruable to the government of the Federation and for related matters.
Nigeria Revenue Service Establishment Bill, Mr. Chairman, 2025. This bill repeals the Federal Inland Revenue Service Establishment Act and establishes the Nigerian Revenue Service as agency saddled with the responsibility of collecting all federal laws while collaborating with other revenue agencies across the three tiers of government. The functions, powers, funding, etc. of the Revenue Service are elucidated in the Nigerian Revenue Service Establishment Bill. Mr. Chairman, the only major inputs we added, Mr. Chairman, is presently, as constituted, the Federal Inland Revenue Service have what they call coordinating directors. They have 8 coordinating directors, and they are all civil servants, and they are appointed internally by the chairman of the Revenue Service. We believe that this does not allow for proper checks and balances. And so, Mr. Chairman, we recommended that if the House do approve, the directors should be 6 directors from 1 per region. So the directorates will be 6 and one from each of our geopolitical zone. And we also added, Mr. Chairman, because we know that a geopolitical zone, for example, Northwest, they have 7 states. And we ensure that there is fairness and there's federal character principle even at that level. And that if Mr. President wishes to appoint these directors from these directorates, he must follow alphabetical order, so that every state within that geopolitical zone will one time or the other have a director representing them. And of course, Mr. Chairman, as executive directors. Mr. Chairman, we also added that each state should have 1 member on the board of the Nigerian Revenue Service, because it's now collecting revenue on behalf of the Federation, no longer just because of federal government. I think these are the major issues that we allow my colleagues, Sada or anybody to add. My leaders are also here. Mr. Chairman, thank you very much.
Without any waste of time, I refer you to the document Nigeria Revenue Service Establishment Bill 2025, where we have only 22 clauses affected by this review.
All the 22 clauses were approved.
Honorable colleagues, the third report to be considered is that of the Committee of Finance on a bill for an act to establish Joint Revenue Board, the Tax Appeal Tribunal, and the Office of the Tax Ombudsman for the harmonization, coordination, and settlement of disputes arising from revenue administration in Nigeria and for related matters.
Amendments made to the Joint Revenue Board bill includes the following. Clause 25, qualification of a tax appeal commissioner. This section was amended by deleting the proposed paragraph C currently contained in the FRS Establishment Bill. It is the committee's opinion that showing capacity in the management of trade or business is not a standard qualification criteria for a tribunal commissioner, and as such expunged that provision.
On the funding of the tax ombudsman and the tax appeal tribunal,
we do not want the Nigeria Revenue Service to be paying so that there will be no bias, because it is supposed to settle disputes between Nigeria Revenue Service and taxpayers. So the provision of the funding of the Ombudsman has been amended to expunge the following: all gift items, grants, and routing the fund through the Consolidated Revenue Fund, subject to the approval of the National Assembly. This is to ensure independence of the office and remove the likelihood of bias towards any party in the execution of its functions. Expenditure of the office of the tax ombudsman. The committee has included additional expenses to be charged to the fund established for the office of ombudsman, including the cost of administration, pre-approved reimbursements to members of the board or any committee set up by the board. And paragraph 8 of the second schedule, which is also in the bill, the application of the Evidence Act. We made amendment to this provision to ensure that the provisions of Evidence Act are strictly adhered to during proceedings of the Tax Appeal Tribunal. And of course, we introduced a new provision. The committee has proposed an inclusion in the bill to provide for the funding of the Tax Appeal Tribunal through the Consolidated Revenue Fund to be appropriated by the National Assembly. This is to put an end to the current funding of the Tax Appeal Tribunal by the Federal Inland Revenue Service. This is, of course, to ensure independence and fairness. Mr. Chairman, this is my submission.
Without any waste of time, honorable colleagues, we can start by looking at the clauses of this very important bill, and we have 159 clauses. So we go ahead and start from clause 1.
Again, all the 149 clauses were approved.
Honorable colleagues, the fourth report to be considered is that of Committee on Finance on a bill for an act to repeal certain acts on taxation and consolidate the legal frameworks relating to taxation and enact the Nigerian Tax Act to provide for taxation of income, transactions, and instruments and for related matters. At this point, it's my pleasure again to call on the chairman of the Committee on Finance to give us a synopsis of this bill, all these amendments.
Nigerian Tax Administration Bill. The following amendments were proposed by the committee under this bill. Section 7, or Clause 7, issuance of taxpayer ID. The timeline to issue the tax ID to taxpayers has been reviewed from the originally proposed timeline in the bill from 2 working days to 5 working days to allow the tax authorities some latitude and make room for possible eventualities. Similarly, any refusal to issue a tax ID must be accompanied by reasons for such refusal to be communicated to the taxpayer. Clause 11, income tax return for companies. The time frame within which a company ceasing business is required to file its returns is reduced from 6 months to 3 months to cut potential revenue loss from non-operational businesses. Before now, in the bill, they came up with, they proposed 6 months. If a company wants to stop operation, that should give notice, it should, the timeline within which to file the required returns is 6 months. We said no. We reduced, the committee recommended 3 months. Value-added tax. For the purpose of attribution, or distribution. The committee recommended that the place of consumption of taxable supplies will be the place of consumption for taxable supplies will be irrespective of where returns are filed. In other words, all companies located in Lagos, Port Harcourt, anywhere, despite the fact that returns are filed from wherever they are located, or Plateau State, despite the fact that returns are filed from their location, what the bill brought for us was to open up in terms of distribution for the consumption. Place of consumption should be the point of derivation of the VAT. So now we have agreed that irrespective, the clause we added is irrespective of where the returns is filed. And it's there, we have the interpretation clauses, they are all there. VAT fiscalization system. The committee included the need for further regulations by the service to get effect to the relatively new provisions of introducing a fiscalization system. Mr. Chairman, sir, the present system where companies file returns without federal revenue actually knowing whether they made that money. We want to deviate. This bill is proposing that we deviate from it. For example, Mr. Chairman, most of our supermarkets that take VAT on behalf of government, they don't remit. And when they want to remit maybe 30%. So the federal revenue did a practical example by going to a particular company, which I will not mention the name, and introduce their system into their own system. And they discovered that the company was actually remitting like 1/10 of what they ought to have been remitting. So we believe that if this is introduced by FRS to all commercial entities, Nigeria will stand to benefit. Mr. Chairman, sir, we added in the bill before you that all companies must give access. They must give access to Nigerian Revenue Service to all their computer. In other claims, Mr. Chairman, the moment you buy an airtime in point A, it is seen by their own revenue service. But here, you buy airtime in point A or point B, or even closer to the office of FRS, they don't get to know because the law does not allow them. Now we are giving them the power, if you approve, for this. So the era of underpayment, under remittance will be over, and it will lead to more revenue for Nigeria. Information to be delivered by bankers and others. An amendment was introduced to allay the concerns of taxpayers in respect of the proposed information to be provided by banks by including the language for the purpose of tax to ensure that the information is not used for the purposes other than that of which it was intended. Similarly, the qualifying threshold for reportable transactions has been increased from 25 million to 50 million. The bill came with every transaction of 25 million must be reported by the bank. The returns must be filed to Revenue Service, and we believe that it will be too cumbersome. Apart from that, so many of our local businessmen are doing more than 25 million. And so, is it that every time they have to file their returns? So we increase the threshold to 50 million, for individuals, and from 100 million to 250 million in the case of corporate entities. Accreditation of tax agents. The committee has proposed the deletion of subsection 5, which implies that tax agents may be accredited by the service notwithstanding the qualification, experience, and certification of such persons. This addresses the concerns around the possibility of unqualified persons being accredited as agents. Currency of assessments and payments. Amendments made to this section ensure that tax is assessed in the currency of transaction, and any liability is paid in the same currency. There were proposals that if you are assessed in US dollar, you should pay Naira as your tax. We said no. If the assessment is in US or Euro or any currency, or Shine or whatever the currencies are, you pay in that currency. And this, we believe, will assist us in our revenue. Power to distrain. Inclusion of the mandatory need for the tax authority to seek and obtain an order of the court before proceeding to sell movable assets belonging to taxpayers. The bill came with seeking our approval to sell anybody's property who refused to pay tax. And we said, no, there must be a court order for that purpose. That's the recommendation. Enforcement of powers. A new subsection has been proposed by the committee to provide for the taxpayer's obligation to provide password, access codes, and any such relevant details to access electronically stored information. This is deemed particularly important in view of the phasing out of manual storage of records and the increased volume of taxpayers' information stored electronically in computers and on the cloud. Power of the President to exempt companies from income tax. Inclusion of the need to obtain the approval of National Assembly where the President intends to exempt any person or class of income or profits from tax. In other words, if any company seeks to invest or you want to give tax credit to that person, you need to seek a National Assembly approval so that we don't continue to deplete our revenue and income. The power of the Accountant General to deduct at source. Similar to the above, the Accountant General is required to receive a resolution from the National Assembly in order to deduct any unremitted revenue due from MDAs. Mr. Chairman, sir, from our practice, we discovered that most of our agencies, they make revenue, but they don't remit, they spend the revenue. And unfortunately, they will claim that it is us that give them approval. We don't give such approval. So we are now saying that they must come to the National Assembly. I mean, the Accountant General has the power from by our resolution to deduct any of such money at source. Distribution of VAT revenue. For VAT purposes, a new basis for the distribution of the 55% to 35% respectively for state and local government allocation has been introduced thus. 50% to be distributed equally, 20% to be distributed based on population, 30% to be distributed based on consumption. Emphasis has also been placed on the actual place of consumption, irrespective of where the returns are filed. As, of course, as provided by stakeholders and our governors and the Governors Forum. Offenses and penalties. The committee has proposed that the interest charge as a fine for contravening the law to be at the prevailing CBN monetary policy rate, rather than the initially proposed 2% above prevailing rates. Mr. Chairman, I think that every other sections there, because they are so, the critical areas are the ones I have mentioned. Mr. Chairman, may also interest you to note that we proposed for our military men and women, especially those in war fronts, that in view of what they are going through, there is no sacrifice that is too much. And we propose that their personal income tax, they be exempted from payee henceforth. This is our submission, Chairman and honorable colleagues. Thank you.
Thank you, the Chair of Finance, again, for a very elaborate explanation of all the thorny areas of the bills. From what you said, you will agree with me that the committee has done a very commendable job in identifying and addressing areas that Nigerians generally complaint during the public hearing. And with your kind permission, we can go ahead now and give our consent to these bills.
Mr. Chairman, I rise to move that the House do resolve to plenary, so the Chairman as Speaker can report to the House the proceedings of the Committee of the Whole. I so move.
Immediately thereafter, the House resumed plenary and effectively concluded business on the tax reform bills.
Honorable colleagues, the House and Committee of the Whole considered the report of the Committee on Finance on a bill for an act to provide for assessment, collection of, and accounting for revenue accruing to the Federation, federal, states, and local governments, prescribe the powers and functions of tax authorities and for related matters, and in so doing, approve clauses 1 to 203, the schedules, explanatory memorandum, and the long title of the bill. Honorable colleagues, the House and Committee of the Whole considered the report of the Committee on Finance on a bill for an act to repeal the Federal Inland Revenue Service Establishment Act number 13, 2007 and enact the Nigeria Revenue Service Establishment Bill to establish Nigeria Revenue Service charged with powers of assessment, collection of, and accounting for revenue accruable to the government of the Federation and for related matters. And in so doing, approved clauses 1, 4, 7, 8, 10, 12, 13, 14, 16, 17, 18, 19, 22, 23, 28, 31, 36, 38, 39, 41, and 42. The schedules, explanatory memorandum, and the long titles of the bills. Honorable colleagues, the House and Committee of the Whole considered the report of the Committee on Finance on a bill for an act to establish Joint Revenue Board, the Tax Appeal Tribunal, and the Office of the Tax Ombudsman for the harmonization, coordination, and settlement of disputes arising from revenue administration in Nigeria and for related matters, and in so doing, approved clauses 1 to 59, the schedules, explanatory memorandum, and the long title of the bill. Last but not the least, honorable colleagues, the House and Committee of the Whole considered the report of the Committee on Finance on a bill for an act to repeal certain acts on taxation and consolidate the legal frameworks relating to taxation and enact the Nigerian Tax Act to provide for taxation of income, transactions, and instruments, and for related matters, and in so doing, approved clauses 1 to 143, clauses 315, clause 383, and clause 387, the schedules, the explanatory memorandum, and the long title of the bill.
Mr. Speaker, thank you for the report. I rise to move that the House do adopt the report from the Committee of the Whole as effectively rendered by Mr. Speaker and adopt them as working documents of this House. I so move.
Mr. Speaker, my dear colleagues, I rise to second the motion that we do adopt the report from the Committee of the Whole as a working document of this House. I so second.
Those in support of this motion should say aye. Those against should say nay. There is have it. Thank you very much.
The Senate, having also concluded public hearings, is expected to follow suit. Stay with us on this channel for updates.